Assalamualaikum warahmatullahi wabarakatuh. Hi everyone, welcome back to my video. As usual, I will introduce myself. My name is Indang Sartika. I'm a student at BOOKKEEPING University, especially in majoring accounting. I made this video to complete the major assignment 1, English for accounting class. And in this video, I want to explain what is bookkeeping and the GAAP system versus tax accounting system. So, let's get started. Bookkeeping. Bookkeeping is the recording of financial transactions, and it's part of the process of accounting in business and other organizations. It involves preparing such documents for all transactions, operations, and other events of a business. Bookkeeping is usually performed by a bookkeeper. The accounting process is usually performed by an accountant. The accountant creates reports from the recorded financial transaction recorded by the bookkeeper and files from with government agency. There are some common methods of bookkeeping, such as the single entry bookkeeping system and the double entry bookkeeping system. Single entry bookkeeping. Single entry bookkeeping is where a transaction only has to be recorded against one category, either an income account or an expense account. A cash book is a perfect example of this method of bookkeeping. This is an example of single entry bookkeeping. Double entry bookkeeping. Double entry bookkeeping is a system of bookkeeping where every entry to an account requires a corresponding and opposite entry to a different account. The double entry system has to equal and corresponding side known as debit and credit. This is an example of double entry bookkeeping. Importance of bookkeeping. Proper bookkeeping gives company a reliable measure of their performance. It also provides information to make general strategic decisions and benchmarks for its revenue and income goals. In short, once a business is up and running, spending extra time and money on maintaining proper records is critical. Okay, then we will discuss GAAP and tax accounting system. GAAP, Generally Accepted Accounting Principles, or GAAP, is the standard framework of guidelines for financial accounting. It includes the standards, convention, and rules accountants follow in recording and summarizing transactions and in the preparation of financial statement. These accounting standards are issued by the Financial Accounting Standards Board or FASB. The main purpose of GAAP system or GAAP accounting is to ensure that financial statements prepared by different entities of a specific jurisdiction are comparable to one another. GAAP accounting is required to be followed by all public entities in the presentation of their financial statement. GAAP system provide for an accrual basis of accounting wherein incomes and expense are accounted for when they are actually incurred, irrespective of exchange of actual cash. 2. Tax accounting. Tax accounting is a method of accounting that applies the same principle and methods as used to prepare a tax return of the entity. The purpose of tax accounting is to prepare financial statements in line with taxation principle so as to keep a track of the entity's taxable income throughout the year. Taxable income can differ from income arising on account of GAAP accounting. This difference may arise as tax rules can hasten income recognition or delay expense allowance that may otherwise be recorded on accrual as per GAAP accounting. Tax accounting seeks to bridge this gap and result in presentation of taxable income. Difference between GAAP accounting and tax accounting. The difference between GAAP accounting and tax accounting have been detailed below. 1. Principle applied. GAAP accounting involves drawing up of financial statement while adhering to accounting standards and rules. Tax accounting involves accounting as per tax rules and principle. 2. Purpose. The purpose of GAAP accounting is to result in preparation of reliable and comparable financial statement for reporting purpose. The purpose of tax accounting is to arrive at taxable income for the specific period. 3. Accounting basis. GAAP accounting provides for mercantile or accrual basis of accounting, but tax accounting allows for use of cash, accrual, or modified basis of accounting. 4. Regulated by GAAP accounting is generally regulated by accounting and regulatory boards such as the Securities and Exchange Commission and Financial Accounting Standards Board in the USA. But tax accounting is regulated by the tax regulatory authorities of the jurisdiction such as the Internal Revenue Service in the USA. 5. Transaction recorded. GAAP accounting seeks to record all transactions entered into by an entity. All expense and incomes are recorded on accrual basis as and when they are incurred. But tax accounting seeks to record only those transactions which have an impact on the taxable income of an entity. 6. Reporting reliability. GAAP accounting presents a complete picture of the financial position of the entity as it records all transactions entered into by the entity. It gives an accurate picture of asset and liability of the entity. GAAP accounting is used for generating financial report. Tax accounting records only tax impacting transaction and therefore give a less reliable presentation of the overall financial position of the entity. It, however, provides a more reliable measure of the income of the entity which is subject to tax. 7. Use by. GAAP accounting is used by entities that are required to report financial to their investor and other third parties. Entities that require detailed reports for financial analysis prefer the use of GAAP accounting. Tax accounting, on the other hand, is preferred by smaller entities that are not required to do any public reporting and are more interested to simply track their taxable income. 8. Complexity. GAAP accounting is more complex as it involves a plethora of accounting standards and principles to be applied a wide variety of transactions. It requires technical knowledge of accounting principles to apply. But tax accounting is a simple method of accounting as it applies tax principles to limited tax impacting transactions. These principles tend to be more universal as they are drafted to be more easily understandable. 9. Time and money costs. Application of GAAP accounting requires a more robust accounting system in place which is more time consuming and involves a higher cost. The application of tax accounting is less complex and less costly as compared to GAAP accounting. Okay, that's my video about bookkeeping and GAAP system versus tax accounting system. Thank you for watching.